I'm just gonna do it on my. Okay, guys. So this is going to be interactive. If you have a question, unmute yourself and talk. I don't want to be a talking head. So if you run into something, don't wait for it. Just ask me what you want to ask. I want to talk about critical period insurance. And what that really means is that if you have a client, and you will, if you at some point lock down accounting for mortgage leads, or you're buying the aged mailers, at some point, and even with internet leads, right? We run into people with mortgages and internet leads all the time that are older and they have a big balance that they need to manage for. It's all, the whole process is about using questions to lay out exactly what they can expect and educating them through the process, and making sure you're hand in hand with them as you explain why they can't, basically like get this, like this client, 56, 57, they're not that old, right? They still qualify for term, they're healthy, but she has a $225,000 mortgage. And if you run that on Americo, what do you think? It's going to cost them like $400 a month to cover one person. 99% of our population isn't going to do that. Okay. So you have to back your client into a good solution that fits both partners and gets the job done. Okay. So the appointment starts exactly the same as every other appointment, because you don't know it's going to be critical period until you're there, right? Like, and I will say this, when I'm doing a phone appointment, the first thing I'll tell you, if it's a phone appointment, I'm always going to open with the unexpected no-brainer policy. Okay. So the first part of your presentation doesn't change. I'm going to do this from the perspective of a phone appointment, but it isn't really different in the home. If anything, it's easier in the home. Okay. So you're on the phone, you send your credentials first thing, and then you say, okay, so guys, what, ever since, or in the recent years, mortgage companies have privatized all of these different protection programs. And essentially they contract out to local brokers to be able to get the right programs for their clients that are going to, fit their needs and also be as inexpensive as possible. So that allows me to shop around a few companies, and, I'm going to ask you some questions. Some of them are going to be financial and a few of them are going to be medical. And it's going to help me figure out which program is going to make the most sense for covering as much of the mortgage as we can. That's important to say right up front, because now you're setting the stage for we may not cover this full mortgage, right? As much of the mortgage as we can, something along those lines, so they understand, oh, okay, so this isn't going to cover the whole mortgage. And they may ask you that right up front, like, no, we do have as long as they're under 70, right, you can sell the no-brainer policy. But if they're over 70, all you can do is critical period policies, right? Even if it's a term and they're healthy enough for a term, you're probably not going to give them a $200,000 or $300,000 term policy at 75 and expect it to stay on the books. Okay. So you say, we're going to cover as much of the mortgage as we can based on what I can actually get you guys qualified and approved for. Does that make sense? They say yes. And I say, okay, let's start with medications. We jump into that. I've already got their email ready to go in case I need to do signatures. We go through the medications, everything. And then now you ask, the most important parts for this is asking about their parents and asking about their beneficiaries and helping to educate them through the process with questions and just little information, right? So are your parents still with us for both of you, or have your parents passed? If they're in their 60s or 70s, maybe even their 50s, they may have already passed, probably, right? And then asking them how they passed and if they had anything in place to help take care of those last expenses, right? And literally nothing in your presentation should be changing at this point, other than if they happen to say something regarding the policies, you're going to try to, just like an objection, you're just going to, agree, ignore, move around, continue your presentation until you can address it at the right point in time. Because if they start saying, well, I only want something if it's going to cover the full mortgage. I've already talked to a bunch of people about all this other stuff, a $30,000 policy. Sometimes you'll get people like that are trying to just immediately cut you off because it wasn't explained to them properly, right? So you say, yeah, I totally hear you. I got to ask the rest of these questions to be able to make sure I can, find the best program for you. So let's just keep going and then we'll see where we end up, right? Anything to just kind of let it go and move around it, keep moving forward. And then you get through that with them. So I'm going to use this current case I did. So I start into it. They're a real nice couple. He goes, I'm on metformin and Ozempic. I'm like, cool. That's no big deal. I'm thinking in my head, John Hancock, maybe, something like that. And then his wife's on just citalopram and hydrochlorothiazide. That's it. And then he's like, well, I said surgeries. And he said, well, 11 years ago, I had a heart attack and a stent. And I'm thinking, well, that's not so bad. And I said, anything preventative? He said, well, in December of 2021, I had another heart attack and a stent, happened in Washington. And anyway, they've got me on a blood thinner for 3 months. All right. Like, I can't do anything for him, natural causes, for at least 9 months at this point. Right. So now I know I'm going to have to combat that at some point. And so I just keep asking, I'm like, wow, man, Linda, I can't even imagine being states away from my husband when he had a heart attack. Plane, train, bus, horse. And she was like, yeah, it was really hard. And I'm like, okay, so when did you guys buy your house? What was the mortgage payment? How much is your mortgage payment monthly? You got to ask that, because that's how you're going to divide to give them the number of months, right? So it's all in your normal risk assessment. You can't miss it if you have that in front of you. You'll have it, but that's what you're going to end up dividing the benefit by to tell them how many months they earn, right? And then anyway, she keeps going. I say, yeah, so you guys bought this house 3 years ago, you refinanced. They didn't refinance recently. And I said, well, I almost never asked this question, but because it was kind of a weird time frame, I asked. And I said, hey, so why did you guys decide to start looking into mortgage protection again? And they said, well, we had a guy out here and he was pushy. I didn't like him. I said, no, we'll do this later. Anyway, time goes on. And then, yeah, I did. I had the heart attack in December and I realized we got to get this taken care of. And I said, that's really common, right? That's a pretty common story. And I'm sorry about the last guy, but I'm not going to rush you. I'm just going to give you my honest opinion on what you guys can qualify for and try to get you guys the best level of protection we can. Does that sound fair? And they're like, yeah. So we took our time. That's why it took a little longer, right? Because they had a lot of stuff going on lately. Anyway, we jumped through all the medications, and now you got to set the stage of how you're going to present. So the very first thing, if they're under 70, I'm going to present is the no-brainer. Okay. So here's what I want to do. This is the product I recommend to everyone that qualifies, because it's going to cover both of you for the full mortgage, all the way till you're 80, which is usually the full term of the mortgage, depending. And write this down. I'm going to give you a few pieces of information about it. So if you pass away, now again, this is you guys are really just concerned about something unexpected, right? Tie them down right there. You guys are just really concerned about something crazy happening. And they'll say, yeah, like getting hit by a car accident, choking on a chicken bone, getting hit by a car when you're checking your mail. Like, I'll say all kinds of weird stuff to make them realize like things happen all the time, right? And then the most likely way you're going to pass away is actually an accident. Believe it or not, there's only a 1% chance you'll die of natural causes until you're over 65. So I always love to go through this policy with people because it's going to cover both of you for the full amount. If you pass away in a car accident, it's going to be 1.5 times that benefit, which is, and then I do the math for them. And then if it's a car, if it's a common carrier, so plane, train, bus, trolley, then, cruise ship, whatever, then that's going to pay you double the benefit. And that's each. So if you guys were to pass away together in the car, because people are they're married, right? They're together in the car all the time. And the reason you're saying all this is to make more situations realistic. Like, oh, that really could happen. Oh, that really could happen. You're trying to help them tie these big possible things of when people hear accident policies, like, oh, that's a waste of money. You're never going to die of an accident. I've literally met tons of people that have died of accidents. So, if you guys are driving together on the way to the grocery store and pass away, then this whole benefit will pay out double for both of you. And obviously your children now will be able to pay off the house, finish all of your final expenses, and they'll even have a little legacy fund left over. So for both of you together, write this number down. It's going to be $51. And they're like, together or separate? I'm like, together. And they're like, oh, and I'm like, exactly. It's done, right? We basically have a sale right there. If you're in a critical period and you're really worried that they're not, if they tell you their budget's $2,400, you're done. That's your appointment, right? Okay, great. What bank do you work with? And you're going into the app, you're done, right? If they ask about anything else, you can talk about it, but you are not going to try and sell them a ton of crazy insurance over the phone, especially when they don't even have the income. Like, just protect their home and be cool. And like, you can come back to them about some final expense later, but get the deal done, make sure you're comfortable. If their income is not bad and they have some health conditions or some history, right? So this particular couple, the wife's mom died of a stroke. Well, actually, she had a stroke and then she died of complications from the stroke, and her dad died of a heart attack at 56. And then Charlie's mom died of cancer under 30, and his dad died at 58 of cancer. So, and he's already had 2 heart attacks. So reality is real for them, right? Plus their income was about 6,600 a month. So I felt comfortable moving forward with talking about some other options after I got the yes on the accident plan, like at 10:20, right? And then I kept moving forward and I said, okay, well, we need to go over what's really going to happen with Charlie. And I very clearly explained how it worked, right? So you have policies that pay and it's all about education when you're going through this, right? There's policies that, I'm sure you've heard of term insurance, which is the traditional way of covering for a mortgage because it's a high benefit amount and it only goes for a certain number of years, just like your mortgage, right? And they're like, yeah, exactly. Well, those policies, after 70, they don't typically offer them because the way insurance companies work is off of mortality charts and actuarial charts. Don't worry about what all that is. But essentially what it means is that all the insurance companies have looked at all the numbers and averages, and they've realized that typically men are going to live to anywhere from 83 to 86, and women are going to live anywhere from 85 to 89. That's where it is, right? They're building everything off of that. So if we start you a policy now at age 70, and you want a 15-year policy or a 20-year policy, the likelihood for the insurance company to pay out at age 89 is pretty high for both of you. Would you agree based on their numbers? Well, yeah. Okay. So that's why it's going to cost more, because they have to be able to account for more than likely paying out that claim at the end of the term. Right. So our job today is to balance the monthly and the way we do that and make sure it's comfortable every month. Because if you don't do that, if it's not comfortable every month, you guys aren't going to keep it. Would you agree? I just bring it right out there. And they're like, exactly. Okay. Hi, little man. So what we need to do is talk about face value versus time we keep it. And guys, if they're over 70, more than likely it's going to be a whole life. So you get to skip this part. But if they're healthy enough and you can actually do a term and they're in their like late 50s or 60s, I still consider that critical period, because again, you're not going to sell them a whole term policy unless they're making 10 grand a month and they just see the value, right? Which even then, people who make 10 grand a month typically aren't trying to waste their money. So you're still going to have the conversation of, we can either cover for the full mortgage for a short amount of time, because that's how insurance companies look at it. It's going to be reasonable, or we can cover for a certain period of the mortgage for a longer period of time. What's more important to you? And you ask them, because everyone's different. Okay. And if they say, I want to have it for longer. Okay, great. Or they'll say, I want to have it for the higher benefit amount. And I've had people go both ways. So it's both ways. Whatever they say, you're like, yeah, that's what I would do too. Okay. So you tie down that their decision at that point. Like, yeah, that's probably what I would choose as well. So they pick either one and you say, okay, so we can talk about 15 years of the mortgage, and you're just having them write stuff down and kind of talking through it, right? You guys have a $200,000 mortgage for 30 years. In 15 years, presumably it's going to be 100,000. So we can cover for the higher amount for less time, or we can cover for a lower amount for a longer time. Does that make sense? Make sure they're with you. If it's over the phone, you need multiple tie downs that they understand where you're at in the process when you're doing this. If you're doing a straight critical period, let's say they were both 73, so you cannot do a accident policy and you cannot do a term, really. I mean, actually now we have we have a prosperity term product that goes to 75, but y'all honestly, over 70, they've got health issues. They're probably not going to qualify. So you need to ask about what they have in place. So you go back to the golden question, right? You've got all the medical information. Let's say they're over 70. They got some health issues. You know, you're going to have to go whole life. You know it. You're just like, that's all we got. We don't even have a no brainer here. Right. And it's, let's say it's a $150,000 mortgage, right? Now you got to say, okay, so do you guys have anything that acts like mortgage protection? Now that would look like maybe significant savings, a 401k, maybe a privately owned life insurance policy, or even a work insurance policy that you got to keep when you retired. Anything that would help us pay down this mortgage if something happened yesterday before I came out here or before we got on the phone. And then you let them answer. They'll tell you all the things. If they say 401k, ask what's the approximate balance, right? And just ignore that. And then, but you can use it, right? Like if they're in a critical period, you can say, okay, great. I'm glad you have that 401k. That's going to help your wife transition. Now we can drop from 200 to 100, right? Like, even though they're probably not going to spend it all on the mortgage, we know, okay, well, now we have that. So that's 100. And if they have some critical, any other insurance, you can subtract that off. Now you're looking at 100,000, right? Still a lot of cut to get with whole life insurance. So then you ask, you've got the amount, let's say it's 1,500 for their mortgage. So now you have to say, okay, guys, I've got a plan in place and we have to talk through this and be in the same page. So what's important is that you guys have $60,000 of equity already built up in the house. We want to make sure that that goes to Julie, or if something happens to both of you, to Eric, your son, if something happened, correct? That's the goal. And they say, yeah. I'm like, okay. So then what we need to do with this program is buy you enough time to make really good decisions about the property, so you guys don't get stuck in a short sale or having to make decisions that are quick where the bank might end up taking the home. So we need to keep this comfortable every single month for you. So I'm going to pull some numbers up and then we're going to review those together. And then you guys can tell me, this is going to be an open conversation. If you want me to show you a few months less of protection or a few months more, I want you to tell me that, because I'm not doing my job right if we don't come together on this. And then they say, okay. And then you run it, right? You do a 30,000, you do a 20,000, you do a 15,000, you do a 10,000, whatever, depending on their income. You're going to give them 3 options. But when you write it out, you're not going to put 30,000. You're going to put, I'll do the math, 30,000 divided by 1,500 mortgage payment is 20 months, right? So I'm going to put 20 months for so much money, right? And then if it's 15, I'm going to put 10 months, almost a year. I'll write almost a year, right? And then I may do 15 and say a year and a half. Okay. And then you make it real. Like y'all know your markets. Okay. So when I'm talking to people in a market where I know houses are selling like hotcakes, I'm like, look, a year or 2 is more than enough to help Shirley make a good decision about this property. We all know this house is going to sell immediately. You're going to have a great profit margin. But the reason this is important is it's going to give her some time to make the transition as to where she wants to go next. We know the house will sell, but where is she going to go next? So that's going to buy her time to be able to make that decision. Same with you, Charles. I know you probably don't want to keep this house when you've already told me, right? At this point, you've talked about it a little bit, like the upkeep of the house is going to be too much. This house is too big for you by yourself. You want to sell it. So it'll give you some money to do whatever improvements you want to do and then pick where you want to move, right? Some of those markets where it's a seller's market are really hard to buy or rent. Like you may be able to get out, but you can't get back in. So there's that perspective you have to be aware of. Like, oh, we're going to sell it. She won't stay here. She's going to go live with her daughter. Great. All right, let's make sure she gets the most out of this property to ensure that she has a comfortable retirement, right? It's not just about selling the house. It's about keeping the equity and being able to make a profit so she has more money to work with when she retires. When you're talking about income, let's say we're in an appointment and we're going through the stuff and you're having a hard time connecting with them. Okay. They're just like kind of giving you information. It's not really going right. And you ask about income and they say let's say they're making 3,000 a month. Actually, let's say they're making 3,500 together. Okay. And they're 72 and they've got health issues. So you've got to do whole life. And now you have, let's say their mortgage is 1,200. So now you've got 2,300 plus they've got bills and all kinds of other things, right? So they're not like rolling in it. You're not going to be selling some crazy big policy. You can't do accident. It's the same process, only you're going to ask a few more deep questions about the income. Okay. So for that 3,500, guys, is that split about evenly between you, or is one person bringing in more than the other? And I ask kind of broad questions, and then I deepen to deeper specific questions to warm them up to talking about finances. Okay. And they'll say about half and half. And then I'll say, okay, whose SSI or Social Security is higher? His is higher. Okay. How much is that exactly? Right. So I've narrowed all the way down to how much he's getting, because that's the one that matters. Whoever has the higher income of the SSI is the one you get to keep. If one of the spouses dies, you don't keep both, you keep the higher of the two. So he says, let's say he says, mine is 1,300 and hers is 900. Hang on one second. Jamil's calling. Make sure he's not on a, hey, are you in an appointment? Okay. Go ahead.
So she's, let's see, 70 years old. She has high blood pressure medicine, and she had her thyroid removed in 2017. Monthly income is about 5,000. No felonies, no emergency savings.
Is this a final expense appointment, or is it a mortgage appointment?
This was, I think, a final expense. I got this from a 1 month lead.
Okay.
New internet.
Okay. And how much cover does she have? Any policies in place already?
No.
All right.
Well, no. I mean, with the job, that's it.
Okay. And how old is she again? 70?
Yeah.
She's still working?
Yep. Mm-hmm.
Okay. All right.
Yeah.
You can do Americo Eagle Premier, which will double in an accident. You'll know today, if it doesn't get approved, you would do Aetna Preferred.
Okay.
And then I would show her, is she going cremation or earth burial?
I'm not certain. I can ask her that though.
Yeah. Make sure you ask her, and make sure you ask her about the beneficiary and who's going to be taking care of everything. Make sure you ask, when her parents passed, what they passed of, if they had life insurance. Remember to get to the why. Don't start just showing numbers. Make sure she understands why this is important and how it's going to protect her.
Yeah, because she has 2 kids. One of them has special needs, so she'll make sure, and then the other one's not working at all.
Okay.
She'll make sure that
they have something. Okay.
Yeah, exactly.
So you can do up to 30,000 with Americo, and doubles in an accident, and you can add on to that if she wants, but make sure it's comfortable every month. If you have a hard time closing it, call me back.
Yeah, I also make sure it's uncomfortable, because we talked about that.
Great.
A second ago.
All right.
Okay, cool.
All right.
That was in case of accident. Okay.
All right. Bye. Okay. Sorry, guys. So now he has the higher of the incomes, and then I say, okay, so John, do you have a pension that comes to you as well, I guess, for the other portion of that? And he'll say yes or no, right? Most people don't have a pension anymore, by the way. It's usually just SSI. Somebody has a pension, you can congratulate him. They, oh man, that's awesome. You're pretty rare. Most people don't have that. And they're like, yeah, I'm great. And I'm like, is it joint? And they'll say, what do you mean? I'm like, so if when you pass, does the pension move to your wife, or does it just end? And he'll say, I don't know. If they say, I don't know, it typically means it's single. And the way I tell them that without being rude is I say, well, I promise you'd know if it was joint, because they'd be taking double out of your check for the last 30, 40 years. And they're like, oh, no, it's probably single. I'm like, okay, great. So what we're looking at, guys, is that hopefully we aren't looking at this, but if we are looking at this, John, if something happens to you first, then Mary is going to end up with your Social Security at 1,300, and that's it. And you guys have been living on 3,500. Is that right? Am I missing anything? And I ask it like a real question, like, am I missing anything? And they say, no, that's right. Okay. I'm like, okay. So, and the mortgage is 1,200. You don't even have to say it, right? She can't live there anymore, right? Like it will be impossible for her to keep the house with a $1,200 mortgage and a $1,300 income, right? And then you can say something like this, like, look, guys, I want to make sure you guys are both protected. But like I said, we have to keep this comfortable every month. Looking at your income situation, it's going to be, and correct me if I'm wrong, and you always give them the option to do that, right? You don't need to tell anybody anything. Your job's just to educate. But correct me if I'm wrong. It seems like it would be more important to put a higher amount of coverage on John than Mary, because John, if Mary passes away first, you still have your Social Security and your pension, which would cover the mortgage. And if something happens to you first, Mary isn't going to be able to stay in the house for very long. Am I correct in that? And they'll say, correct. Yeah, that's right. And I say, okay, so let's focus on John first. And now I want you to keep in mind, we still probably need to put some protection on Mary, but let's focus on John. And then we go into John and I go through the situation, right? I'm going to do the, however many months that I think is going to fit in. Now they only have $2,300 of income outside of their mortgage, and that's not including all their bills. So I'm probably going to show him like 8, like a 10, a 12, and a 15, maybe a 20,000, maybe. And I'm going to do that in terms of months, right, on the paper. And then you storytell, just like Shannon said, right? All of this is just storytelling through questions. You're building the story of how their life's going to play out if they do this or not do this, right? Either way. And then you have it on paper. Okay, so John, here are a few different options that I'm fairly certain we'll be able to qualify you for. I won't know for sure until we put an application in, but based on my assessment, I'm fairly certain we can get a price in this range. For 20 months or almost 2 years of protection for Mary, we're looking at $243 a month. And you can start at the top or you can start at the bottom. It doesn't really matter. It's all on paper. 15 months or about a year and a half of protection is going to run you closer to $190. And then if we do 10 months of protection, so just under a year, we're looking at around $120 a month. All of these options are going to protect Mary so she can make smart decisions about the property. It's up to you and Mary as to which one of these is going to make the most sense for you right now. Keep in mind, as long as your health stays around the same, we can increase this down the line if you decide to. But I want you to pick the option that's going to make absolute sense. You don't even have to blink an eye at in protecting you right now. And then again, we can increase this later, but I really want to make sure it's comfortable. Which one of these options makes the most sense? Or do you want me to show you some more numbers? And then you're quiet, right? And if they're too quiet for too long, then you say, what questions do you have? Let's talk about it. You break the ice a little bit with older people, guys. I mean, I would say if it was an internet lead and we're just talking about mortgage, I'm gonna be quiet. I'm gonna be quiet. But with older individuals, if they're really quiet and you can tell that these numbers are making them incredibly uncomfortable, you need to break the ice and say, hey, I know these aren't great, right? These numbers are not what we were maybe expecting. So let's talk about it. Tell me what you're thinking. Break it down a little more. Be people, right? I think one of the most impacting things that came out of conference for me was these are people. Your presentation doesn't have to be perfect to do a critical period, right? All you have to do is actually engage your brain with the people you're sitting in front of as if they were your grandparents. How would you want to protect them, right? How would you want to talk with them? If I was sitting with my grandparents and I showed these numbers and they were feeling uncomfortable, I'd say, well, okay, let's talk about that. Like, what would be more comfortable, Nana? Like, I need to know because I can't leave you without anything. You're my Nana, but I can't have it be uncomfortable either, right? Like, let's talk about it. Let's just be honest. And you've set the stage for that all the way through the presentation. If you've asked the right questions and you've gotten the right tie downs with them, right? If they've been with you on this journey through the conversation, they should be good. So they'll say, well, I really just thought I was going to be able to protect the whole mortgage. And I'll say, yeah, I totally understand. It sucks. It is what it is. Like I don't like this any more than you do. I wish I could protect everyone for the full mortgage, but the reality is this is a protection in case you pass away. And even though I think you're going to make it to 100, the reality is the insurance companies don't, right? They think it's going to be like 85 to 90. And I know people are living longer and longer every day, but the reality is we don't know, right? And so this is to make sure that no matter what happens, Mary's got good. You've protected her for 50 years. Let's be honest. You've had her for 50 years. You're just going to make sure she's good if you pass away first. And these conversations are really intense. I'm not going to lie. Like, critical period is a lot more intense than regular. I almost never do them over the phone until recently. I finally started diving into them because they are so much that you have to go through, and they're thinking they're getting 200,000 and now you're selling them 10, right? And you got to make them love that. So it's a process, but it doesn't have to be a bad one, right? If you get a lead that says they're 75 years old with a $300,000 mortgage, if it's me, I'm going to try to go sit with them in person. If I can. If I can't, this guy lives in Odessa, and like, though I love going to Odessa, I'm just not in a place where I can do a 6-hour travel trip this week. So, and I'm not going to leave him without coverage, right? That's the other part. Like, if you wait, like, oh, I'm just going to save up all my leads and go out there in 1 week. Like, well, what if they die before then? So there is a certain part where like, well, I probably do need to talk to these people. But I think if I had to narrow it down, the most important things you can do in a critical period is take your time, ask lots of questions, uncover all the details from the income, starting from broad questions, leading into specific questions. Make sure you understand all the illnesses, and then you talk them through and educate them on how it all works. They know. They just haven't thought about it. They just got a card that said they qualify for possibly covering their whole mortgage, getting all their cash back with no medical exam. That's what they got in the mail, right? That's what they saw. That's what they filled out. Now you got to work backwards from that. So, you can't blame them for being like thinking that's what it is. It's not like they're ignorant. They just didn't understand what was happening, but they clearly want the protection. You just have to help them understand what's going to be available and how it is going to help them so much. And that's all storytelling, right? And engaging them in the story, have them tell their story, explain how it's going to make a difference for them, right? It probably is more important that I cover Charlie. Charlie had a heart attack 3 months ago. He needs it. He may die. But the reality is I can do a 2-step plan with you, Charlie, but you do have insurance at your job right now. So we're actually in a pretty good spot, at least till the next year. So what I want to do is come back to you in 9 months and put something preferred in place if you don't have any other issues. But I do see a gap with Linda. Linda has nothing right now, and she's healthy. So we can cover her and get her some living benefits, which will protect her since she does have strokes and cancer in her family. What does that sound like? And they're like, yeah, let's do that. And when I was saying $50,000 and $30,000, they were like thinking it felt low, right? And then I immediately just twisted it to months. And I said, that's 3 years of mortgage payments or 2.5 years of mortgage payments. And they're like, oh. And then they felt better. And they're like, yeah, let's go with the 50. I really thought they were going to go with the 30. I thought they were going to do 25. And then they were like 50. Okay, great. And so, but they came to that decision themselves. I said, look, you got to think about the time frame, how long, and again, she was comfortable with term because she was healthy enough in 57. But I still view 57 and older as almost a critical period appointment because there's very few people that are going to cover their full mortgage for that. And then God forbid they're a smoker, double everything, right? I sold the no-brainer and then I started explaining how it works. But man, the simple ones are 73 and above, and it's going to be whole life. That makes it all easier from the beginning, right? Sometimes it's even harder when you're kind of in the middle and you're like, oh, they still qualify for so many things, but I got to be comfortable. It's all just questions. And at the end, I'm like, any of these are fine. We can always add to this. You guys want to down the line, as long as she's still in really good health and the prescriptions don't change, we can add. You give them the out to add. And then they usually make a pretty smart decision for themselves, right? Does anybody have any questions or had you run into anything in a critical period appointment where you felt stuck that you want to review? Nobody.
I just have a comment. I had a couple that had a $200,000 mortgage, and they were expecting that large amount. And this ended up being a chargeback, unfortunately. And what I learned just now is what I could have done better is breaking it down into monthly payments. Like that's huge, because they went for $110,000 of coverage with 4 different policies, 2 on each person. And they slept on it. And then the next day they were like, no, we're going to pay, $500 a month for not even half of our mortgage to be protected. But if I had done what you said and broke it down into payments, I think I'm actually going to go back and visit them and talk to them about this again, the way you just said that. And it's going
Yeah.
to be kind of uncomfortable to go back and do that, but I don't care. I'm going to go
Yeah.
back and see if I can get them protected, because once you break it down into monthly payments, that's really smart. I like that.
Right. Well, and it is like, if they start thinking about what they owe and what you can provide, that feels like a huge gap. Right. And so it
Yeah.
is really important to think, okay, this is how long this is going to protect you. This is the story that provides, right? She's going to have this much time to do this, that, and the other. You talked about wanting to redo the kitchen. She's going to be able to redo the kitchen. She's going to be able to update the entryway. She's going to be able to get the best realtor. She's going to be able to wait for the right season to sell. She's going to be able to do all these things. And she's going to be able to find a nice place and have a little left over to help her transition. Right.
Totally.
That's the story versus nothing. Right. Or, they, like you said, they have a huge amount of insurance and they're like, oh, well, it's only half's great. Like half will buy you 15 years. Holy shit. Like, that's great. Like, I don't know how many times I can actually do that, that's a very good point. And again, with these critical periods, it's always better to undersell and go back. Like, they're clients for life, right? And they've got grandkids, they've got aunts and uncles and everything. And you're going to call them every 6 months to a year and say, hey, how's everything going? I know holidays are coming up. Is your daughter coming in town from wherever? You now know, right? You know about her. You protected her. Yeah, she's coming in. Like, okay, well, I know it's, holidays and nobody likes insurance and ever, much less the holidays, make a joke about it. But, if she's in town, you want me to at least swing by or jump on a call and give her some information. I'd love to make sure she's protected too. Open yourself up to referrals all day long with people like that. When you protect them in a really solid way, you can't leave one of these appointments without loving the family. It's impossible. Like, literally, this guy's like, I'm coming to Waco, and like, I was like, cool, I'll take you to lunch. I was like, when I come out there, I don't want to be eating Taco Bell. I'm gonna come over there. And they're like, we thought you were coming today. We cleaned the house. And I was like, oh, I'm so sorry. I thought we knew it was a phone appointment. But it's just like, these are so intense. Like, they're at the end of their life. Okay. Whether that's 20 years or it's 5 or it's 0, like, they're in the last phase of life, and you have to be really cognizant and respectful of understanding, like, what's going on, especially for those of us that are younger, right? Like, we've got 60, 70 years left. Like, it's, we're aging, but we're not aging that fast. The insurance companies say they have this much time left. Right. And that's a really uncomfortable conversation to have. But if you can be the one that can sincerely, authentically talk with them about it and be like, you cannot go into this commission breath at all with these. Like, it has to be 100% about the client. I don't care if it's a $23 deal, but like, if you're really like that with them, they will be with you forever. But
that's what I told my last appointment I was in. I said, I gave him his 2 numbers, and he was like, oh, I don't want it. Is this too expensive? I was wanting to pay $30 a month. And I said, great. Well, like I said, I'm going to show you a couple numbers. We can go up, we can go down. So I showed him those numbers, and he said, great, I'll take the $30 a month one for $5,000 of coverage. Went through everything, submitted the app. And at the end I said, so who are some emergency contacts for you? Who would I need to call, or who would need to call me when you pass away? And so he gave me 3 contacts, and I said, do you think they would benefit from an appointment like this? He said, actually, yeah. I said, great. Well, I'm going to call them, if that's okay with you. Let them know what we did today, and let them know that you did get protection. And if something happens to him, that they should call me. And he said, great, call them and see if they need insurance too. So I got 3 referrals off of that.
Good job.
Hey,
Next time,
hey,
even
Ron.
have them send a group text before you leave or something, so that it's even more concrete that he submitted it. But great job. Go ahead.
Hey, Ron,
Cool.
when you're asking for those referrals, do you just like put them in your phone, just like right then and there, or do you write it down, or what do you do?
Yeah, I just wrote them down here on the back of the risk assessment. I also, when I'm in the appointment, when they give you their beneficiary's name, you need to ask them how far they live.
Yeah.
Because if they live 30 minutes away, that's great. If they live in 5 states away, you're gonna need to make sure that the client knows, hey, they're gonna need to travel, they're gonna need to take off work. Maybe some of this insurance money will be able to go to them to cover those expenses. And so, yeah, I just asked them their phone number, their relationship with them. I said, how do you know them? Are they family? Are they a friend? And yeah, just ask, because they want to share this with you. Like, I didn't
Yeah.
feel weird at all. I felt zero weird asking these questions. I was like genuinely wanting to know their emergency contacts and wanting to help them out with insurance too.
Yeah, and I think that is a really good point, and that can help you take a lot of the sales pressure off yourself, especially if you're brand new going into houses. Like, don't focus on like screwing up, right? You can't, right? Especially if you're in person, even if you say the wrong thing, as long as you're being genuine, people laugh. They're like, it's cool, like no big deal. I've even quoted wrong before and then been like, oh, I messed this up. And they're like, oh, it's okay. We'll just dial back the benefit. And I'm like, okay. So, I mean, all kinds of things will fly in the house. You don't have to be perfect, but like, if you can really be in that place, like every time I get off the phone with somebody, I'm like, look, you're going to call, like, this is how I end every appointment. And it's a value builder, especially with the older generation. I say, okay, I've got your number in my phone. I've got your information. I'm texting you. Please save my number. And I said, I need you to also send it to Linda. Linda needs to have it. And I make sure the spouse has it. So the spouse and the contingent said they need my number so that in an emergency, when this happens, she can call me. And day or night, I keep my phone on loud. Even in the middle of the night, I answer for clients no matter what. There's no disturb on my phone. If something happens, call me. I will take care of the claim. I will make sure and be on your wife doesn't need to be on hold on the worst day of her life. And that's exactly how I say it. And I say it about the daughter or whoever. She doesn't need to be on hold with the company on the worst day of her life. I'll take care of that. I'll make sure all the other policies you mentioned are taken care of as well. I'm licensed in the state. I can take care of any of that for you. But I need you to put it in her phone, and I want you to tell her, like, put it as insurance lady. It's cool. I will not offend me. But if she's sitting there and I say it like this, I'm literally like, if it's the middle of the night and she finds out that you passed away and she's trying to remember my name so she can call me, that's not great. Amanda, Samantha, Olivia, Sabrina, what was it? Like, just put it as insurance lady if that's going to help. And God forbid, just tell her my name and number are also on the policy. So if she still puts my name and forgets, it's on the policy. She can call me directly from that and I will take care of it. I have not changed my number since 2003. And they're like, oh, okay. All right, thanks. And I'm like, sure. And then they're in like Flynn. They're not going nowhere, right? Like, and they realize what that's going to really be like. That last tie down just makes the story that much more real. What happens when someone passes? Someone's making phone calls. Everybody's rushing for information. Everybody's looking for stuff, right? Where's the policy? I can't remember where they put it. Did they say they put it in the safe? Did they give it to the other lady? Oh man, the policy's out. We moved. We put it in a box. Everybody's rushed when it happens. And so be the person that can create the calm, right? You're the calm in the storm that's happening. You're going to make sure everything's organized. They don't need to worry. So they're the hero of their story. And then you're the hero of that moment when they're no longer there. Cool. And if you have problems, if you're in a critical period and you are struggling or are unsure about what to ask next, just call me, call Ron, call anyone that's been doing this a little bit longer than you, and just loop them in. Say, look, be honest. Hey, I haven't been in this situation before. John and Mary are with me here. And I really wanted to ask your opinion and make sure that I'm setting them up with the best possible plan. And I'll know what that means. Like, okay, time to go. Like we're going to sell this thing right here and we'll do it right there. And don't be afraid to do that. You don't have to look like the one that knows everything, right? I don't know everything. I ask Jack stuff all the time still. But the more you do it, the easier it gets, obviously. Does anybody else have any questions about critical period? Okay.
I do have a question. It's
Go
a
ahead.
small question. I had a client the other day. She wanted to protect her mortgage, which was over 200 grand. She wanted to protect herself and her husband. The only problem was the husband had some health issues, but I think I texted you. We figured some stuff out. The only problem was their budget was $70. So I didn't find any packages in a short amount of time that can fit that budget. But what is a nice or polite way to tell them, hey, if you want this amount of coverage, you might have to spend a little bit extra coin, or maybe not say it like that, but a nicer way.
Yeah, sure. So I know you jumped on a little bit late, but it's all in how you set it up in the very beginning, right? So you can get to budget, but normally it's all about framing what they're going to be able to get approved for right from the very beginning. So the very first part of what you're saying is like, I'm going to go through all these questions, everything, and I'm going to figure out, what company is going to be able to offer you the best rates to get as much of the mortgage covered as possible. As much of the mortgage covered as possible already tells them we're not covering the whole thing, right? If you know for sure that you can't, then that's what you're going with to start. That's your opener, because that primes them to say, okay, now I need to adjust you're adjusting their expectations down slowly so they understand. Then you go through the health stuff and you're like, okay, so we do have some things going on here, but the good news is we still have some carriers that are going to be able to offer us what's called critical period insurance. And then you're going to explain what that is. So basically, your monthly mortgage is $1,000. We're going to see how many months we can provide protection for each of you, but you need to dive into the income more, because one of them makes more than the other, right? One of them gets Social Security, one's higher than the other. Who's really going to, if they're both going to be in a bad position without each other's, like if it's going to be bad, then you got to cover both, right? If one's going to be okay and the other one's not, then you're going to cover the one that needs it the most with more coverage. Sometimes men have a higher Social Security because they were the provider and they have a pension, but it's not going to transfer to her and she's going to have nothing. Like she's only going to have whatever left over when he dies. But you have to ask those questions about the income, starting general and getting more specific, about pensions and everything, so that you can create that story and get the permission from them to say, so based on what I'm seeing, it's probably going to be more important to cover you, John, than Mary, because you're okay if she passes away first, you'll probably still be able to support the mortgage, but if you passed away first, she wouldn't be able to. Is that correct? Correct me if I'm wrong. And they'll say, yeah, that's right. Or you say, okay, looks like both of you guys, your income together supports this home, but if something happened to one of you, either one, you guys would be in a situation where you would need to move fairly quickly. Is that correct?
Right. So theoretically, we want to cover primarily the breadwinner.
Depends how the income breaks up. Right.
Okay.
And so if they both, let's say they both don't have pensions, they both make 1,500-ish from Social Security. So they have 3,000 together, their mortgage is 1,500, right? So they're okay as long as they're both alive. When one
Right.
dies, one Social Security goes away. Now they have $1,500 of income and a $1,500 mortgage.
Mm-hmm.
That won't fly. So in that case, you have to cover both of them, because either one would be stuck in a short sale quick if they didn't have some type of protection on themselves.
Okay, so it just depends on their income or their situation.
Every single situation is different. You have to ask a whole lot more questions to understand how to protect them properly. And then you say, okay, again, with your health issues, and of course, you guys are aging, you're over 65, 70, our options are a little different than when you were 30 and you're getting insurance, and you make it educational, and then they go through it all. And then you say, okay, so you don't, if they say it's $70, you can solve for $70 on the quoter, like you can go to America if they're healthy enough for America. If they're not, whichever carrier, and usually you can solve for premium. So if I do Eagle Premier, and then I can go down and I can say monthly, and I can say using premium amount, male, I want to get, it'll update.
The only thing that was tough to trying to find the budget was their age. The woman, the breadwinner was 57 and her husband was 50.
They're not old.
Older.
Yeah, but yeah, I mean, with whole life, you could have covered $5,700, right? Or so. Sounds like nothing. How much was their mortgage payment?
Monthly?
Yeah.
I think it was $750, I want to say.
So you would have been able to buy them 6 or 7 months of protection. You would basically say, this is going to buy you 6 months to make a transition and get your house on the market. Make sure you can sell it in the right season.
And then when the time comes, they can add more or
Yep.
do whatever they need to do. Okay,
Yep.
gotcha.
And then you say, but we're gonna put this no-brainer policy in place in case something crazy happens, the whole house is paid off. But this way, we're covering both bases. If something natural causing happens, you have 6 months. If something crazy happens, which honestly is more likely at your age, the whole house is paid off. Does that sound like a good plan? And they agree immediately. It's like, yeah, you're covering all the bases. That sounds great. Like,
No
know,
brainer.
it's a no-brainer, but you have to frame everything properly and just find ways to help them understand, like, you need this time. You're buying time, right? You're selling it as time. So what we're going to do with this critical period is we're going to purchase as much time as we can that's comfortable to make sure that you guys can make a smart transition with the property if something did happen. Do you agree? And you have to get those tie down points. Okay.
Got it.
Anybody else? Cool. The next one we're going to do is going to be just traditional final expense appointments for internet leads, because I think we've got a lot of new people coming on and those are even easier. This is like the hardest appointment you'll do. And so I thought it was important because we do have a lot of people working mortgage leads right now, but internet leads are important as well. So the next one will be over final expense and also doing phone sales with live transfers and trying to, do one call closes on phone sales. We'll have to do a training on that as well. But yeah, go and buy leads and be ready. The discount ends tomorrow. So if you haven't bought your internet leads, I recommend you do so. You can use the code up to 5 times. So if you don't have a ton in your area, you can buy them in 5 batches if necessary. But there probably won't be another big discount for a while. So I would maximize what you can get out of that for the next week. I will be dialing all day Monday on Zoom. I'm buying internet leads and going hard. So if you've not seen me dial internet leads on objections, or your people haven't, I would recommend being on there and dialing with me because it's going to be a party. All right, guys, y'all have a great weekend. Enjoy the Super Bowl. Be safe. And I'll see you bright and early on Monday morning.